Welcome to the Million Dollar Blueprint with Karen Padetti, where we can talk about the honest truth about either starting a business or growing your business to the $1 million mark. I will give you a roadmap that provides you with the ideal client or buyer, financial wisdom, marketing, branding, leadership, and so much more. Thank you for joining the Million Dollar Blueprint. I hope you enjoy the episode. Let's face it, to run a successful business, you need the fundamentals. And one of the basic and necessary things that you must have in a business is that you have to have revenue coming in and keeping your expenses kept to a minimum. I know this sounds absolutely silly, but you would be shocked to see how many businesses go in debt and they can't figure out that simple formula. Every business needs to know what their break-even point is, which really comes down to how much revenue do you have to bring in to pay all of your expenses. People need to know what their break-even point is. For example, I have employees that come to me all the time and they tell me that they need a raise. And I said, so why do you think you need a raise? And they will tell me, because I can't pay all my bills. And I will ask them, okay, what is your break-even point? And they have this glossy look on their face, and they're staring at me, trying really hard to figure out what the heck I'm talking about. And I'm like, what dollar amount do you need to make, or that you have to have for income to break even? And they're still staring at me like I just lost my mind. I'm like, okay, all the money you bring in minus your expenses. What is that expenses? What is that total amount? Still, they look at me like I'm crazy. And the funny part about all this is, they see money all the time, especially in the beauty industry. People see money coming in, then they see money going out, but there's always a lot of money transferring between hands. And I'll ask them, I'll say, well, how many times a week or how many times a day do you go to Starbucks? And there was this group of girls that worked for me, and they would go 4 times a day to Starbucks. And there was like 4 or 5 of them. And they all had their same orders, and they would literally take turns going 4 times a day. And I finally said to them, I said, how much do you each spend? And they gave me their numbers, whatever their fancy little drink was. And I said, okay, so that is for 1 drink, and you do that 4 times a day. And I remember taking 4 times a day, and you work 5 days a week times, let's just say, 50 weeks. And I go, are you guys kidding me with this? I said, that is ridiculous. But they looked at me like, yeah, but we've always been doing it. It's not really that big a deal. It's our little thing that we just do for ourselves every day. And I'm like, it's a huge deal. So my first thing I would suggest to you is to look at your individual finances. Generally, if somebody is really good with their individual finances, you'll find that they can be really good at business finances as well. And I don't care if you work for somebody, if you're the manager, owner, really you should all do this with your own personal finances. Write down all your revenue that you have coming in on a monthly basis, whether it be wages, contributions, interest, dividend, alimony, whatever the revenue coming in. And then I next tell people to look at their individual expenses. Write down your monthly expenses. Everything that is monthly, whether it be rent, your mortgage, water, electricity, telephone, cell bills, everything. Write everything down and figure out what your monthly bills are. And don't forget, you have to also include your quarterly bills and your yearly bills. People seem to think, oh, they only happen a couple times a year. They're not important. Everything that you have to pay out is important. Now, the other thing I find very funny is when doing this, I find that they'll have credit card bills and they'll write down, about what they pay in a month, but they forget to look at what the interest they're paying, because that's really important. Are they paying how much principal, how much interest, how many months has this been going on? So really get a good understanding of that in itself. Oh, the other good thing I find is if people think if it's under like $25 what they spend on, maybe they could run to a grocery store or pick up something they didn't expect to, and they spend $25, they think, oh, that was just a little something. No, every single dollar counts. And it's amazing how sometimes if it's under a certain dollar limit, people think it's insignificant and it doesn't matter. It matters. It's huge. It's what you're trying to do is come up with your bottom line. What does your real financial picture look like? So again, write down every single expense. And I tell people when they're trying to get a really good idea of where they're spending money, because this is the other story I get. Well, I don't really spend money. Okay. So I tell them every time they take out their wallet, in a little notebook, write down where they are, how much it was, and what it was for. And especially young people, they think like $20, $30 is like something simple, and they just don't count for it. So I really want everyone to get a really crystal clear idea of the revenue you have coming in, but every expense going out, how big or how little it is or how often. I want you to really have it written down so you can really analyze the full picture. Because a lot of people don't look at the full picture. They look at almost all the picture. And I want to really understand. So total revenue, total expenses, what is your bottom line? I'm going to tell you a little story. I was helping somebody out with their finances, which I do. I run a course, and it's getting your finances straight. And it's all, everybody can come to it. It started out with it being free, and I only have, my conference room only holds about 30 people, 25 to 30, and so that's where I max out. But one person was really embarrassed about coming to the class, and it's a class that I don't share other people's information. That's not what we're there for, but we're there to gather all their information, put it down on paper, and I have kind of worksheets all done for them, so it makes it much more easier, organized, so we can really get a true picture. But again, this one person just wanted to do it one-on-one, and I do clients that way as well. And so they had a house, and they have all your typical payments, but she wanted to get her finances in order, but I felt like I was pulling teeth because she'd give me so much of the picture. So basically, when it came down, now we had gone over this for a couple times, and then she'd forget stuff and then tell me. And I said, we can't come up with a plan until I know exactly everything. Whether you want to, and I said, where we need to be is like, might be uncomfortable, it might be unsettling, it might be a little disturbing, but we need to see what your total financial picture is. So basically, it came down to she owned her own house. On this house that she owned, she already had a $50,000, I think it was $58,000 line of credit taken out on home equity. And through all the other bills that she had $33,000 on other credit cards. The highest one being around $8,600. And all the way down to like $362. But it all added up to about $33,000. And when I looked at the interest she was paying on each credit card, it was 29, 27, 30, 31, 27. And I'm thinking, there's no way that you're going to be able to pay these off based on what you and your husband make and what we need to do. So, we figure out all the credit cards, almost all of them. And then I'm like, okay, so now we need to look at what are your monthly bills, your mortgage, your utilities, phone, cable, anything. So then, of course, she says something about a PayPal account. And I'm like, wait. We don't have a PayPal account on here at all. And she's like, oh, did I forget that one? I'm like, yep, another $800. So basically, at this point, she's thinking that, she wanted to take out more money than what she really needed to pay off bills. And I'm like, why would you want to do that? Well, in case something comes up. And I was trying to really explain to her, at this point, you've got to be committed to a plan. And, to move forward, because she also was at 60 years old. And so, she did have a house. At this point, the bank owns most of the house. And this is really what she's going to have for her future if she sells it to go into, assisted living or whatever else. So it was pretty scary. I mean, she cried several times and things of that nature, but we really had to get it down, down to how can we manage this? How can we pay this off? How can we get this all straight? And honestly, the couple together made over close to like 110, no, probably actually more than that, 120,000. And so I'm just thinking, and I said, what do you have to show for all this? And she's like, well, nothing. I go, well, like, what were some of your big purchases? Nothing really at all. And I'm like, okay. She goes, well, I bought a couple couches. I was into buying couches, but then I didn't like them, so I would sell them. And I go, okay. And I just couldn't make rhyme or reason about it. And I finally said, listen, you're at an age that you need to change things really, really, really quick and get your finances in order and have a plan and stick to it. And I told her I would help her monthly to keep reviewing her expenses, making sure nothing's missing, making sure they're getting paid, seeing the money come in, where's it going. But it was, unfortunately a rude awakening. And I said to her, what got you to this point that all of a sudden now you decide to look? She goes, well, I just couldn't get ahead. And I said, well, how long have you been struggling? And she goes, like a couple of years, but I take some of this money to pay over here, and then I take some of this money to pay over there. And I'm like, yeah, you were failing with this long, long ago. No offense, but you were just kind of stealing from Peter to pay Paul, but you weren't getting ahead. And these interest amounts are crazy. So, at times it can be very, very scary. And it was one of the things I started doing long ago for my staff, is that anybody was invited to this, program, this seminar I put together. And, anyone who's older could come, but I did make it a mandatory request that anyone who worked for me that was younger had to sit through this at a young age and go through it, so they could start right at a young age, learning about how to handle finances, how to handle your money, what to do with it. Are you thinking about retirement? Are you thinking about your health insurance? Anything, that pertains to them and their lifelong goals. So it is one of the things that I've done, and it's crazy to see how some people live and they're just, honestly, they're just swimming backwards, never going to get ahead. So I wanted to really just share that with you so you understand that, there's people out there, they're trying really, really hard and they're trying to do the best, but they just don't know what to do. And if you happen to be one of them, find somebody that can sit down with you, go over your expenses, go over your, where you are in your life, what you need to do in the next 5, 10, 20 years, and help you get organized so you don't end up waking up one day at 60 thinking, oh my God, I have $91,000 in a home equity loan. My house is worth $150. What do I do now? So that's why I wanted to bring this all to you. So take your revenue and minus your expenses and see exactly what your break-even point is. Really get in touch with your spending. And one of the future podcasts I'm going to be talking about is called What Blocks Do You Have Regarding Money? What are your thoughts and concerns about money? Because a lot of times that will come into play when you are dealing with your finances. Every time you spend money, make a mental note, or even better, write it down so you know what you're doing, where it's going, and do that for a couple months for no other reason than just to get a really, really accurate idea of where your money's going. So I don't care if it's individual or business, but everything in your life revolves around understanding the numbers, being able to control costs, focusing on profitability. as well, not just keep generating revenue. Because in my situation I was just telling you about with the person, her and her husband, I mean, he kept saying, I'll just work more overtime. And I'm like, isn't he working like 50 hours a week? How much more overtime can he constantly keep working to keep bringing in money? So again, they really needed to control their costs. And my other thought about all this is when it comes to tracking revenue and expenses, make sure you are meticulous. Your records should be 100% accurate. And I don't care if you're using a spreadsheet or software, whatever it is that you use, make sure you fully understand it. You see where the numbers are, where they're going. And remember, track every single month. So it's almost like you have a P&L for your own, individual finances. So you can see all the money going in to your bank account or going into you and all the money coming out, and really start looking at that month to month, so that way you can see some patterns and see what you can work on, what you could do differently. You want to really make sure you're getting that accurate picture of the total numbers. And again, every business or individual needs to understand like a P&L, your profit and loss, whether in that same thing as individuals, money coming in, money going out. Understand a cash flow. How much do you get in at what times of the month? When do your bills need to be paid? Do you need to change when bills are being paid? Because let's say you get paid twice a month as opposed to 4 times a month. Really analyze the flow of the money coming in and when you need to pay certain bills. And again, when you're first done, you just analyze every single cost. It's easy to get rid of stupid spending, but then you just continually looking at everything. What is your credit card rates? Can you get them lowered? What fees are you paying? The other thing is nowadays, you can go on apps and see what apps you are paying for that you're not usually using. And I love asking, like in this class, does anyone paying for, any apps like Amazon Music, anything? No. And then you're like, okay, I want you to join an app right now to see what kind of dues or memberships you're paying for. That's the first place you need to start, because you're paying for something that you don't know. And also, when you get your credit card statement in, for my business, my credit card statement is usually 4 to 6 pages, unfortunately, with line items of stuff I bought. I look at every single line item, and then I have to know what category it goes to. Does it go to the boutique expense? Does it go to hair expense? I have to know what it does. So I want you now to start deciphering on your credit card. Is it a house expense? Is it your expense, your husband's expense? Is it for the child expense? Where is all this money going out? Is it for children, repairs, silly spending? Again, look at all that. The other thing I've mentioned is a credit card rate. Do you have lots of little credit cards out there with, balances on them? Or do you have one balance and one credit card? I mean, I always personally think if you can use one credit card and pay on one credit card where you're keeping all your expenses together, that is the best. People have a tendency when they're opening like stores, whatever it could be, Abercrombie, whatever the different Macy's, Lowe's, Home Depot, and they start using it. Oh, I'll put it on this because this isn't due for 6 months. Okay, when 6 months comes up, did you pay off that balance so you're not getting any interest and finance charges? So the other thing is every 9 months you should start looking at all your your different line items of expenses and how can I get that lower? What could I do to get that lower? You should always be shopping for lower insurances and always be looking at that so you know exactly what is going on. I even call my credit card companies and I tell them, this interest is too high. This is ridiculous. I want it lowered. Or for instance, one of our things was we processed gift cards. And we had one company say they would only charge us 2.9%. Well, that sounded lovely, except for there was a disclaimer that said for every transaction they were going to take 30 cents, Plus, they had to keep so much money in a recovery account, and then so when I was done looking at it, I'm like, really? They're gonna hold like $12,000 to $1,600 of my money every month? What are they, nuts? So I'm like, no, we won't be going with you for this, this, and this. And then they want to negotiate. I'm like, no, 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 no. I don't want to negotiate. And here's another thing: if you are a business owner and you take credit cards, I love when they do this. On this type of credit card, I'm going to give you 2%. On this type of credit card, I'll give you this percent. Corporate credit cards usually have a much higher percent. But so when they go through it, every credit card company has different percentages for different line items, types of cards. And I always say to them, and it took me a long time to figure out what the hell they were talking about because it was so confusing. And I finally said, I don't want to spend more than 3% as a total. So if my business does $100,000 in credit card sales, when I add up all those different credit cards and I divide it, I want it to be 3% or 2.9%. If you cannot do that, and I want this in writing, I don't care what each credit card that people use has what percentage, if that makes sense. I want to know the total. If you can't guarantee me a certain total for all of them, then I'm not going with you. And I'll tell you what, that was the biggest scam for the longest time. I could get you in this category to drop and save $150. So if you multiply that times 12, you're saving X amount of money. Wonderful. But in these two categories, now I'm spending $250 more. So get them to really show you what the bottom line is and what their company can do for you on a whole, not on actual individual tier levels. That was one of my favorite ones that I'd go around circles with. Also, just be very cautious and mindful of tax implications if you're a solopreneur, whatever it may be. Make sure you are paying the taxes you should, or you're saving your money to pay taxes, because you can't even believe the amount of businesses I have gone to and they've gotten into trouble because of taxes, or individuals who start their own business and they totally forget about the tax aspect of their business. So if I could suggest anything to people, I would definitely suggest, if you are not a financial person, I would learn individually for yourself about your own financial situation, the simple stuff of your own finance. If you own a business and that's not that you're not the guru of that, then I would find a bookkeeper, someone who could put everything into a system for you and go over it every week or every other week. And then I would also find a CPA, so you can bring this to them at the beginning of each year and say, this is where I am, this is what we're doing, what is the strategy for the next 6 months, for the next year, and kind of go like that, and have meetings with that person a couple times, at least quarterly, if not a little more. But so and the CPA knows exactly what is going on, and that way you're not going to all of a sudden a year later like, oh, we forgot about this, we need to pay this, or this isn't right. And again, the bookkeeper can have the monthly things for you, the monthly reports, so you can look at the whole picture. I think those are two of the best things, again, if you are not a finance or accounting person, that you must have. Because remember, the people that you employ for business have to pay for themselves throughout the business. It's basically meaning I've seen so many people say, oh, I can do the finances, or I can do the bookkeeping and accounting, but they don't know what they're doing. So then when it's all said and done, they've spent way too much money, they haven't paid taxes, they haven't done things correctly, so now they're paying the price. Right out of the gate, you want to definitely make sure you are on top of things with your finances, because if your finances go amok, your business is totally going amok. So I don't mean to beat a dead horse, but I can't stress enough how important it is to get those things in order. Now, if you are not meeting all your expenses, obviously the thing to do is to increase your revenue. And really you need to figure out how much do you need to increase your revenue to hit break even. And look at your revenue. What's working? What's not working? What months were better than others? Why was that? And always be analyzing the revenue side as well. Because a lot of people will cut expenses, but the bigger problem sometimes is the revenue. They're just not meeting enough revenue. And really getting to the bottom line of why that is huge. The other thing I get asked a ton about is revenue or profit more important? So what do you think? Revenue or profit? Well, by definition, obviously, profit is more important. However, again, you have to make sure you're really looking at the revenue side as well. And again, the profit comes down to when you're having amazing revenue coming in and really watching all your costs and being, kind of like a dog on a bone with all the costs and making sure you're doing everything smartly, as wise as you can. And that brings you down to your profit. When one of those, whether it be revenue or expenses, is out of whack, your profit is totally out of whack. So it is imperative to really track both numbers, revenue and profit, and to understand the whole company's performance. I know some people that come out of a gate starting a business and they're doing great, and then it starts to kind of wean down. So why is it weaning down? What are the factors in it? And again, I've talked about business plan, and we get much more into the business plan in the next episode and everything that goes into a business plan. That's when, if you're out of whack with revenue and expenses, really going back to your business plan and looking that over to see what you're missing or what you're not doing at 100%. And it is true. You really have to really understand the whole financial aspect of everything. Because let's face it, there are times when, if you increase the revenue, you're also going to be increasing the expenses. So how do you increase revenue as much as possible with keeping your expenses low or only minimizing going up, so that way you are getting the best net profit as possible? So basically, in other words, both revenue and profit provide different yet very valuable insights into a business's finances. Improving your top line and the bottom line growth largely depends on having an excellent product, but having the product noticed by the right audience can also make sure that is fueling the growth of the profit or fueling the growth of whatever your product is. Revenue and expenses are key indicators of a business financial health and its ability to grow. Increasing revenue while also effectively managing expenses leads to higher profits, fueling reinvestment and expansion. However, if expenses rise disproportionately to revenue growth, it can negatively impact the profitability and hinder growth. I know that sounds like a mouthful, but it's very simple. Revenue provides insight into the company's sales performance and market reach, whereas the profit reveals its ability to manage costs and generate financial gain. By understanding these concepts, you can make informed decisions that drive both growth and sustainability. What are the effects of revenue growth? Well, investors and market confidence. Revenue growth signals to investors and to the market that a business is thriving and capable of expanding. Consistent growth often leads to increased investor confidence, which can lift stock prices, attract further investment, and definitely increase the company's market valuation. So why is revenue important to a business, and how can you increase revenue growth? Well, here's 6 ways you can increase revenue growth. First is to establish your goals, which you should have been doing in your business plan. building a high performing outbound sales team. So, however you drive your sales, make sure you are looking at it, investigating it, tweaking it to make sure it's working and being extremely successful. Deploying revenue focused market strategies, being flexible with your pricing plan, constantly evolve your product. It's not just a one and done. You're always looking at how to make your product or service better. Focus on upselling and cross-selling. Again, sales is huge when it comes to revenue, as well as marketing. So those are all some ways that how you can increase your revenue growth.